funsupermart.com.
How has the ASEAN market performed so far?
The higher growing ASEAN markets like Thailand, Indonesia, Philippines this year has been doing really well. It's done about 15 to 20%. The reason it has done so well is because these are the few countries in the world that is actually showing decent growth in terms of corporate earnings growth and in terms of GDP growth. As a result, it has beaten most of the markets out there in terms of performance. The other ASEAN markets of Malaysia and Singapore are a bit mixed, and the mixed performance is because the company growth has not been strong this year. In Malaysia's case, is about the earnings growth has been revised from 5+% down to 0% currently. As a result, the Malaysian market has been flat to down, and the Singapore market also has been flat as a result.
Among all the ASEAN countries, which countries do you prefer the most?
For us, we like Indonesia a lot. We think there is a lot of potential reform that could come in. The appointment of the presidency will come with a lot of structural changes in the infrastructure space, in the oil and gas space, and in the overall management of the country. In the short term, we think there could be some hiccup because his idealism is costing him his position in parliament. Based on his past track record, he has done really well as the governor of Jakarta, doing many key reforms in a very short span of time. So we still have faith in Indonesia. The other country we like a lot is Singapore. I think Singapore is a slow growth country, but 70% of the listed stocks in Singapore are offshore based. So it's a stock picking market, and what we like about it in particular is the strong corporate governance and transparency of how Singapore corporates behave themselves because of the tight regulation there. There's also very decent selection of dividend yielding stocks in Singapore.
What are the risks that investors should look out for?
The risk currently is global in nature. Basically, we are shifting from a scenario of global growth and rising interest rates to one where there is slower rising interest rates. And this is causing a lot of funds to reposition and shift their allocations away from some of the cyclical industries and cyclical countries and back into yield instruments like bonds and REITs. So this risk, if it continues, it could erase most of the returns this year in terms of repositioning.
What is Affin Hwang Capital's strength in managing ASEAN equities?
Collectively, as a team, we do about 2-3 company visits per analyst. Combined, we probably have about 400-500 company visits per year. We basically want to have a very good understanding of the companies and of the markets that we operate into. Even though ASEAN is considered as a bloc, we believe each of the countries behave very differently, and we spend a lot of time trying to understand the local nuances and how it behaves and how it affects stock prices.